Hey everyone, welcome back to Corporate Decoder. Today EverQuote just filed their latest Form 8, and I am seeing a governance change that hints at increased protection for their executives. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company held its annual meeting and made a key amendment to its founding documents, which we will break down. Alright, so EverQuote Incorporated, the online insurance marketplace, recently held its annual stockholders meeting on the 4th of June 2026. This filing, a Form 8K, is like a public announcement of important events that shareholders and the public need to know about right away. The big news here is actually an amendment to their charter, think of the charter or restated certificate of incorporation, as the company's core rulebook. They've amended it to add something called exculpation for certain officers. Now, what does that mean in plain English? Essentially, it means that in specific situations defined by Delaware law, certain company officers can now be shielded from personal liability. This is a common practice for companies incorporated in Delaware, and it is designed to attract and retain top executive talent by reducing their personal risk when making tough business decisions. Now, how did they get this amendment approved? Well, it was put to a vote at the 4th of June annual meeting. The company presented a few key proposals to its shareholders, and the results are laid out in this filing. First up, they voted on electing directors to the board. This is pretty standard. 7 individuals were up for election, and the votes show they were all overwhelmingly approved. You can see names like David Blunden, Sanju Bansal, and John Shields, who you might recognize from previous filings or news. The votes for are significantly higher than the withheld votes, and the broken non-votes represent shares held by brokers that did not receive instructions from the beneficial owner. This indicates strong support for the current slate of directors, for instance. Paul Denninger received over 50 million votes for his re-election with a much smaller number of withheld votes. This is where the exculpation amendment comes in. The proposal to approve this change to officer liability passed. Looking at the numbers, there were over 45 million votes for the amendment compared to about 12.9 million votes against. This shows that a majority of the voting shareholders were in favour of providing this enhanced protection to the company's officers. The purpose is to make sure that executives can make decisions with confidence, knowing they are protected from personal lawsuits for unintentional errors or oversights as long as they acted in good faith. The last significant vote was to ratify the appointment of PricewaterhouseCoopers LLP as their independent auditor for 2026. This is also a routine but crucial step. Auditors are like the referees of financial reporting, making sure the company's financial statements are accurate and follow the rules. This ratification received overwhelming support, with over 64 million votes for it and a very small number against. This signals trust in PwC and the company's financial reporting processes. The filing also includes Exhibit 3.1, which is the actual certificate of amendment. This is the legal document that officially changes the company's charter. While we don't need to get into the nitty-gritty legal language, it is essentially the final stamp on the officer exculpation provision. So, what does this all mean for EverQuote? This move to exculpate officers is a sign of maturity for a publicly traded company. It suggests they are focused on strong corporate governance and attracting experienced leadership, even though it does reduce shareholder recourse in certain situations. On the other hand, the overwhelming support for director elections and auditor ratification indicate stability and shareholder confidence in the current direction of the company. Looking at the broader picture, EverQuote operates in the competitive online insurance market. While this filing doesn't provide specific financial figures, their recent news has been mixed. Remember, stock prices can react to many things, and while executive protection is a governance detail, investors are always keeping an eye on earnings and growth. For example, there was news about director stock awards, which is common, and also headlines about surging earnings estimates, which is a positive sign. However, there was also a report of the stock falling on quarter 2025 earnings back in February. This filing is more about the structural governance of the company rather than immediate financial performance, but it sets a framework for how decisions are made and protected at the executive level. The risk I am watching is how this increased executive protection might affect accountability down the line if performance falters, though the overwhelming shareholder vote suggests this is not a major concern for them currently. What I am actually looking for is how these governance changes align with future financial performance and market share growth. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.